Welcome back. Now, the South African equity release market is one area the government as well as elderly homeowners can urgently reap benefits from. The equity release market for retirees is an important financial instrument that they can tap into to help them access the value of their properties as well as provide financial support for their retirement. Chris Loker, Executive Director of Water Financial, joins us now with more insights. Thank you so much for your time, Chris. I was actually very intrigued when I read your article on this on Business Day, the newspaper, and I hadn't heard of this instrument before. So just explain to us what equity release is.
Well, firstly, Zanati, thank you for having me. It's a pleasure to be here. The product of the sector has been around internationally since the 1960s, and really it's predicated on a belief that one should be able to tap into the equity in one's home. Not just for retirees. Around the world, people that are not retired are able to do so in order to finance their lifestyle or to use the equity to produce income or reduce costs, whatever reason it might be. And our particular focus is on retirees. It's not always the focus, but the multiplicity of product options are offered around the world to allow retired people that aren't able to generate more income, but they have wealth in their asset to be able to draw an income from that asset.
Yeah.
So that's really what equity release is. That, as the name implies, it's releasing equity from your home and turning it into cash flow.
This is actually quite interesting, and especially considering that it may not only be for retirees. That, I mean, we do know that people have fallen on hard times across the world. So it's quite interesting that there is something to be unlocked there. Just talk to me about awareness of this, and, you know, is there awareness or is there a lack of awareness? And if there is, why has they been considering the fact that you say internationally it's been around since the 1960s?
Yeah, it's an interesting conundrum because in the developed markets, typically lower interest rate environments, as I said, the product has existed and it's a fairly established sector. I mean, circa 300 odd billion rands worth of lending around the world, in the likes of Europe and the UK, USA, Canada, Australia, New Zealand, etc. In the developing countries, because of higher interest rates and because the typical product is to lend a person 50% of the value of the equity in their home, it hasn't really taken off in developing countries, because in a higher interest rate environment, if your property value or your property price appreciation is not keeping up with your cost of the loan, you can very often get yourself into a negative equity situation, which is problematic, obviously, particularly for retired people. So we've redesigned the product from the ground up to suit a developing world environment, a higher interest rate environment. But the awareness doesn't really exist because it's not a sector that's been around in South Africa. Most people that know about it from the international market. So what we often get is where people's children have immigrated, for example, and the retired person is left in South Africa. Often they will contact us from Australia, New Zealand, wherever else they might be, the children, and say, can you help us, because my parents or grandparents in South Africa are battling, they are asset rich, i.e. they have a residential property that is valuable, but they're cash flow poor because their cost of living is outstripping their pension.
So then how far behind are developing countries like South Africa compared to the developed markets? And I'm just wondering then, I mean, how much value can we actually unlock from this in South Africa?
Yeah, look, it's a great question. I mean, I would argue very far. And that's problematic in and of itself, because I think particularly in South Africa, but it's probably true for many African countries, there's a lot of dormant assets residing in residential property. So people that have paid off, they have bond-free assets, bond-free homes in South Africa. They are cash poor. So to force them to be either sellers or to live in a in a financial predicament, in a difficult financial situation, is
Yes.
nonsensical. Particularly when one looks at the value the multiplier value that comes from allowing people to tap into their equity. So what happens is people can tap into their equity, they can sustain themselves monthly, they can afford to maintain the property, to keep up with their rates, with their cost of living expenses.
Yeah.
They're reintroducing capital back into the economy. So you're turning literally a dormant asset into an economically productive asset. So for developing countries, that's sorely needed. And the World Bank, in fact, identified this in the 2020 report, where they actually said that they believe that systemic change is required from policy makers and from government and from financial institutions in order to facilitate the use of equity release as a viable sector for developing countries. We obviously concur with that view.
Is this for people with properties that are fully paid off, or can people with mortgages actually use it?
Yeah, look, we've chosen simply because we obviously early in this market,
Yes.
in the South African market, we've chosen to go to bond-free
Okay.
properties. So we've chosen to offer the product to people that are retired, that are over 70, that have a bond-free property. But in theory, there's no good reason why, if somebody still has a bond and they have equity in their property, that they shouldn't be able to unlock that equity.
And I'm just wondering, you spoke about, policy makers coming in here. What actually needs to be done? Is there some sort of certainty that is needed? How can they come in to play a significant role in making sure that we are able to use these dormant assets for significant economic value?
Yeah, I mean, hopefully I won't be too long in the answer, but the first point is to recognize that residential property is the biggest financial asset in the world.
Yeah.
Okay, and in South Africa too. So by far, it's the biggest asset class. So for many, many, many people, this is a significant holding in their wealth. So you can't ignore it in the balance sheet, is what I'm saying. And if you look at how one buys property, you take a significant portion of your salary, 25, 30% starting salary, and you invest for a long period of time, typically 20 or 30 years. So that's a beautiful investment, particularly if it's growing at a rate higher than the inflation rate, prevailing inflation rate, which is the norm. So particularly over long periods of time. So it's a great and wonderful financial asset. So to enable people to tap into that financial asset makes sense. But there's almost that systemic change that's required. This is what I'm talking about in terms of either policyholders or financial institutions or both need to recognize that this is a viable asset to tap into. And then you overlay that with the fact that many people are retired in South Africa unable to live a decent and dignified life.
Yeah.
So up to some research indicates that only 6% of South Africans have enough to retire on.
Yeah.
And then you factor the third thing is that people are living longer.
Yeah.
So even if you're part of that 6% and you've planned and you've been fastidious about your financial plan, you could reach a situation where you are 80, 85, 90 years old and you have the realistic prospect of living another 5, 10, 15, 20 years. So for those people, no matter how much you planned, you didn't plan for an extended lifespan.
Yeah.
So all of these confluence of factors come together and create a significant and challenging problem.
Yeah. Well, thank you so much for your time. Really, really enlightening us on that instrument that not a lot of us are aware. And hopefully the message gets to the right people. I really appreciate your time, Chris. That was Chris Loker, Executive Director of Water Financial.